This is Taking Stock on Bloomberg. We're taking stock of the automobile industry. You just heard two guests say that the government's Cash for Clunkers program is doomed to fail. So if consumers refrain from buying new cars, what about the aftermarket? What about this Cash for Clunkers program? Tony Cristello, he's got a few ideas for investors. He's an expert in the automobile supply business. He covers the industry for BB&T Capital Markets. He joins us from Richmond, Virginia. Anthony Cristello, good to have you with us.
Glad to be here. Thank you.
Let's start off with the Cash for Clunkers program, because we're getting some questions from viewers, from listeners wanting to know, the program seems to be successful in places like Germany. Why can't we replicate that success in the United States?
Well, the underlying focus here in the United States is to try to generate an incremental sale for the General Motors or Ford or Chrysler. What's going on in Germany is it's an emissions-based program that's spurring sales. They're taxing inefficient or higher carbon producing engines at a higher rate, and consumers don't want to pay the incremental taxes. That's what's really underlying the growth there in the success of the Cash for Clunkers.
All right, so Cash for Clunkers there having to do with emissions. Here you think just generating those incremental sales. Could this be that is really the government's plan, is they want to generate these incremental sales for a political constituency?
Well, owning 60 or 65% of General Motors, certainly you could certainly lean toward that theory right now. Well
said, Anthony. I appreciate your diplomacy there. Let's talk about something a little bit more down to earth. Let's talk about the automobile after the supply market. Talk about Advanced Auto right now. They've got a commercial segment and a do-it-yourself segment. The story seems to be in a turnaround and commercial, correct?
That's correct. They're really focused in their business and trying to drive incremental sales to the professional installers and the garages that are out there.
What are they doing to make that happen, and is it successful?
It certainly is successful. This last quarter, they posted a 17% organic growth rate in that segment. It's also successful because they're starting to carry more and more of the parts that the professional installers want. We talk about Cash for Clunkers, we talk about the industry, what's going on with the dealerships, and General Motors is talking about closing a couple thousand, Chrysler talking about closing almost 1,000. Well, people are going to have to take their cars somewhere, and if they're not going back to the dealerships, they're going to go to the independent aftermarket, and that's where Advance is focusing right now, those professional installers that are going to probably benefit from some of the fallout at the dealership.
Now, what about spending plans at Advanced Auto Parts? I mean, they're spending in order to, improve operational efficiency and also to get the message out. They've been spending a lot of money.
They have been spending a lot of money, and it's a situation where over the last few years they underinvested in systems, underinvested in inventory, and now they're playing a little bit of catch-up. So they're going to have to figure out at what point does the spending stop, and when do they begin to really leverage some of this investment spending. And they'll tell you that second half of this year, certainly into next year, they're much better positioned to start to leverage some of the spending initiatives.
Now, you got a buy rating on the shares. You got a $50 target. Tell me about margins right now. Where do you expect margins to be by the end of the year?
Well, I think it's a situation where, you're still going to be in that 9% operating margin. Where the opportunity is going to come from is taking that 9% operating margin to, say, 12% over the next few years. I think that's really when you see earnings power in the neighborhood of $5 or better.
So let's turn a little bit to another company that you cover. This is Monroe. What about their acquisition strategy? Why is that important for Monroe?
Well, they're consolidating the industry. They're a large northeastern player that is basically competing against the dealership base. Listen, consumers are figuring it out. The dealerships have been charging a lot of money for repairs, probably 30–35% higher than the independent aftermarket for a long time, and some of that trust has been broken. So in this environment, the consumer's finding ways to go outside of the dealer network to fix their cars, especially when they're out of warranty or they're getting older.
What about the acquisition specifically? ProCare as well as, American Tire Distributors, and you've got a buy recommendation. What about those two acquisitions? Are they going to be accretive, and when?
They're going to be accretive next 12 months. They'll be accretive, probably a nickel out of the box, and I think it's a situation where what it does is it extends Monroe's geographic reach, and it allows them to continue to take share, likely from smaller independents that are out there that are having a hard time investing, spending the capital, or coming up with financing from banks right now. The larger competitors are certainly doing better because they have better access to capital.
And Monroe Muffler and Brake, are they spending as well? We talked about Advanced Auto Parts. Are they going to be spending a lot of money as well?
They'll spend, but only on an acquisition basis. They run a pretty lean operation. They have good systems. They have good infrastructure in place, and overall run pretty lean. So I don't expect anything out of the normal from an expense standpoint.
All right, we're going to continue the conversation with Anthony Cristello of BB&T Capital Markets. We're going to talk about O'Reilly, find out what his rating is on the stock and whether the used car parts business is the place to be putting additional capital. This is Taking Stock on Bloomberg. This is Taking Stock on Bloomberg. I'm Pim Fox. My guest is Anthony Cristello, a BB&T capital market analyst, expert in all things automotive. Let's turn our attention now, get in the driver's seat. Tell me about O'Reilly Automotive. They've been working on the integration of CSK, right? You attended the Investor Day. How's that going?
It's going well. It's a situation where there's a lot of opportunity. It's an underperforming group out of California, where they have, on the West Coast, where they have a lot of stores, a lot of breadth, but it was certainly poorly managed. And this is a situation where you've got a good management team in O'Reilly taking it over, and over the next year, 2 years, really going to extract a lot of positive things from this company.
Now, those converted CSK stores, how are they showing up in the comps, Tony?
They're tracking positive. They're tracking positive comps now from a base that was running negative, and we think it's as the longer they go into the integration process, the end of this year, you'll certainly start to see a lot more of those stores included in that converted store base.
All right, now you've got a buy recommendation, the price target 45. Tell me about moving into the commercial space for O'Reilly, specifically on the West Coast, because that could be the 2011 story.
That's right, and I think that is the 2011 story. It's a situation where CSK only had about 18% of their mix in the commercial side of the business, and this is an area that O'Reilly had 50% of their business mix in. So they know the business well, they know the brands, the parts, and they know how to execute. So it's a situation where as we get the integration done, get the DCs in place, there's a lot of leverage here to that CSK story.
Let's talk a little bit about geography away from the West Coast. Tell me what's happening in the Southeast, also an area for O'Reilly.
The Southeast has been tough. There's been some weather, but I do think it's a situation where O'Reilly, along with some of these other companies we've spoken about earlier, are seeing some very good sales trends. And I think part of that sales trend growth is a function of what's going on with the macro, is a function on consumer budgetary constraints, and some of it doing the repairs themselves, some of it trying to find trade down from the dealer. O'Reilly's also going to grow, opening up a new DC in North Carolina, and they're going to continue to expand up into the Northeast and Mid-Atlantic.
All right, now we talked about how these are growth companies right now, whether it's Monroe, Muffler or Brake, whether it's O'Reilly, Advanced Auto Parts. They've got to really hit the numbers in order to not disappoint investors, right? I mean, any kind of a speed bump, and we don't see a 20 PE on these, do we?
Well, that's right. I mean, they're priced, I'll say, close to perfection, but I think some more than others. When you look at O'Reilly, there's a lot of expectation that they're going to continue to outperform, that they're going to continue to have good, solid integration. And right now, when you look at the industry, I do think that they're going to continue to have good results. It's a situation where the consumer, look, no one's buying new cars. You can argue, hey, 10 million SAR, and maybe the second half of the year that gets a little bit better. We're down from SAR 16, 17 million a long time ago.
All right, that is past history. I want to thank you very much, Tony Cristello, coming in from BB&T Capital Markets.